Hello and welcome everyone for another market commentary from StashAway. With us again, our Chief Investment Officer, Freddy Lim.
Hello and Happy New Year.
Yes, Happy New Year.
All the best for 2020.
It's been quite a while since we last spoke to everyone, but obviously we had the holidays come up. You've been traveling a little bit as well.
Yes.
Good thing markets have been going up nicely, so also we didn't have to share too many commentary on the market that has been bad, right?
Yeah.
A lot of things have fallen in place that we've been discussing quite a lot over the last year, right? But before we get into that, let me make you aware of a couple of cool events that are coming up now through our StashAway Academy. One of them is going to be next week, Wednesday, the 22nd of January. We're going to talk about financial plan B. So, what can you do to protect your financial plan A, the things that you can control, versus the things you can't control, right? Should something happen to you. So it's super, super interesting. We have a great guest speaker come in who is a very successful financial planner who knows this stuff inside out. So if you're interested in that, 22nd of January, come join us for that in Singapore. For Malaysia, we have a great event. It's going to be Bring Your Own Lunch event. It's called Investing for Women. So for all the women out there, men can join, of course, still too. We'll teach you some techniques about financial planning, on how to invest, and things like that. That is on the 5th of February in Malaysia. And again, for both of these events, you can click the link below and sign up for them on Eventbrite, on our website, Facebook, and wherever else you can find us. With that being said, Freddy, as I mentioned before, the year has been quite positive already to start. The ending was really positive. The beginning has been quite positive for equity markets and actually almost all kinds of asset classes, right, so far. But what has driven that? This week, of course, we had the phase 1 deal signing. We also had, it's finally ratified the USMCA, right, the Mexico-Canada new agreement with the United States. Is that all, or what do you see? What kind of has been going on?
We also have great bank earnings.
Yep.
Right. So if you step back a bit, the trade deal is priced in already, but there's no surprises there. The deal went ahead. It got signed. There were at first some trader concern about the U.S. not cutting back any more tariffs that they're imposing right now. But the U.S. is actually using this as a leverage against China 10 months later to engage and say, hey, have you been complying with the agreement? On good behavior, we'll take back more tariffs. The funny thing is American consumers are the one paying for it.
So we said that, we covered that before.
Yeah,
right?
so that created some noise, but it didn't. But the market went back up. So this goes to show that it's easy to read all these commentaries and all this intelligent news wire and overreact. It's so easy today. What we have to do is weed out the noise and focus on fundamentals.
Yeah.
And the fundamentals have shown that bank earnings are good. They've been lagging for a while.
Yeah.
Tech earnings been good. More and more corporate earnings are picking back up. And these are the leading indicators for a lot of the leading economic index in the US. It's been slowing the whole of last year, yet you have a good year. And this component of earnings is rebounding, tells us that the leading indices in the next few steps is more likely to rebound than to go further down. So in all, even the fundamentals are stabilizing and could turn up.
Yeah. No, I think especially the bank earnings have been a huge surprise on the upside, right? Even Donald Trump said they should thank him personally, right? For these things, at least the JP Morgan CEO. But so we talked a little bit about the US then there, right? Last year, we also re-optimized the portfolios in August time, right? Which all worked out quite well. But one of the things was that we saw a little bit of a slowdown outside of the US, right? Any changes to that? Do you see any kind of improvements there? Is it just keep kind of the same? Anything you want to share there?
That's actually a very critical part for the markets this year. And the good news is it's tend to be very driven by China. Especially emerging market, if you look at the relationship, a lot of it, the Chinese numbers tend to turn first. And so we focus our attention on China. And if you look carefully at Chinese data, and normally people have a hard time on that because they don't know what is good, what's reliable, accurately depicted by Chinese data. But the Likert Chang index was designed specifically for that. This index measures how easy it is for consumer to get loans. So there's a bank lending channel. It also measures freight volume, how much cargo has been moved around the country. Yeah. And it also measure stuff like electricity usage of factories in China, right? Yeah. So real production, real indicative figures. And this number has stabilized, has always been unable to break the 6 percentage point level, and has rebounded in the last print. From 6.1% year on year to 7.4% in one go. Yeah. So we are seeing economic stabilization in China. And in fact, they could turn around. So this is something that would, down the line, something that our algorithms are monitoring all the time. And ERAA, the algorithm that StashAway uses, would re-optimize our users' portfolio whenever the number gets further confirmation of turning around. So yes, we went all weather for global non-US markets last year in the portfolio. That could very well change somewhere along the line in 2020.
Yeah. No, I think that's a great explanation for that. And then it's quite important also to ignore the noise, right? And look at data, right? This news items, and which leads me to the next point on this is geopolitically, right? This is something when we weren't speaking to you the last couple of weeks, what happened was obviously the Iran-US tensions, right? The whole meddling in the Middle East right now. Turkey going into Libya now too, which they have nothing to do with it, right? They need to meddle now with it as well, and Russia and everyone, right? Everyone is kind of there, not there. Do you foresee this going further than what it is right now? It already seems to have died down, right? Over the last week and a half, probably. Anything there that you suggest people?
Well, the Iranian conflicts was a surprise, but actually years in the making. Yeah. There's a lot of history behind it that I will spare you, but the end result is it raises a lot of issues where Trump has too much power in terms of killing a general of a foreign country, right? So that raises issues, but in return, the Iranian situation has gone in a way where they're being blamed for downing the jet now, because 70% of passengers on the flight, they're Iranian citizens, yes. Right? And of course, the next casualties are the Canadian citizens. Yep. So condolences going to the victims and their families. But what it goes to show is that they do generate short-term volatility to markets, but it rarely sustains itself. Yes. And the greatest impact is obviously on the oil market, because Iranian supply is still a pretty substantial part of the global market. It's been sanctioned, but obviously people have been going around the sanction and getting supplies from Iran, right? Yep. So that conflict put that in question again. But other than the oil market itself, which actually had less and less impact on the other markets now, it used to have a lot of impact. It doesn't just have any, perhaps the economies have changed. The structure of our economies have become more online, more e-commerce, more 3D printing. It's less about physically moving stuff. And we are going green, we're going AI, going driverless car. Who knows, one day we may get to the point where the oil market has zero impact on the world, right? But for now, we do have to tolerate some short-term swings, but it has proven that it's unable to change the course of the markets so far.
Yeah, well, thanks, Freddy, for that. And I think, again, same as the other discussions we had before, news items, right? Headline news, ignore them, right? Focus on the fundamentals, focus on the data. This is, again, for geopolitical as well as earnings and everything else, right? Look at the data first. Yes. And I think the data is showing much more positive signs than negative at this point in time.
That's right.
So with that being said, Freddy, thanks for talking about, kind of like the more market commentary, kind of what's going on in the markets. Let's finish it up. I think we had a couple seminars this year already on financial planning, but we're still getting a lot of questions, right? In terms of like, what should I do first? When should I start investing? What should I set aside? Maybe just a quick, 3-minute overview of what you believe people should be doing, right? When is it the right time to invest? How much should we have in savings and things like that? Just to give it a wrap up, because at the beginning of the year, people think about their finances and goals and go from there.
Firstly, we hear a lot about the market is so high now, new highs, and should I stay on the sideline, not invest now? But that is assuming that the whole world revolves around one market, right? The stock market. But when you're talking about a portfolio of multi-assets, there's so many mixes. You can have REITs, natural resources, government bonds, income-driven assets. There's so much to do that you are completely missing out if you do not invest in a diversified portfolio. So do not think about the market as one thing.
Yep.
Think about your portfolio as many things. That's number one. Now, going back to planning, planning is a majority part of your long-term success, really. I really believe that first, we need to have always a plan where the first step is have enough cash buffer for your living expense. If you're a salary worker, maybe the next 6 to 12 months of monthly living expenses, you should have it in a cash equivalent. That cash can be deployed to short-term deposits, or in our case, the StashAway Simple product, which currently yields 1.9% per annum for holding your cash in a portfolio of 2 money market funds. So that is an alternative. We designed this product to manage cash. Once you get past cash, invest any savings over and above that buffer. And that is a function of whether you are your risk profile. Are you a balanced risk profile person or you're the high risk profile person? That can be done through the app where answering the questions and doing the planning on our app helps you realize what risk level you're naturally inclined to. And which in turn determines which portfolio at StashAway that you should have. So those are all the sequential steps that we should take. Once you get all those in place, what's the last thing to do is to stick to the plan.
Yes.
And invest those net savings on a monthly basis.
Yeah, make it automated, right?
Yeah.
Systematic. We
Put
always mention this,
with your
exactly.
banks.
Standing instruction from the bank. Make it automated so you do not forget it and you don't fall prey of the problem. Over time, you forget to do it manually. All of a sudden, you have cash saved up again too much, and now the market is higher again. And now what, right?
Exactly.
When do I deploy it again?
Think about it as a portfolio.
You don't want to get in that problem, right?
Yeah. And so with the monthly plans, when the markets are down, your new cash flow that comes in is actually getting more units of the underlying assets behind the portfolio, not just one market.
Yep.
Yeah? And when the markets are up, you get less. But however, systematically doing it smoothed the noises to your net worth, which is the key point. It reduces the volatility of your net worth and hence reduces the chance that you overreact to anything that's scary, tweets or fire and furious in the near term, right?
Yes.
Ultimately, our only job as investor collectively is one goal. How do we not get KO by the markets?
Correct. How do we stay
and
above?
then compound over time?
Correct. And one of them is ignore the noises. I think we said it many times today. But Freddy, thank you so much again.
My pleasure.
Really appreciate you joining again. You will see both me and myself and Freddy again next week. So looking forward to that. If you have any sorts of questions, please feel free to put them in the comment section below the video. Freddy and myself will pick those up, or our client engagement team will be able to answer them for sure. Otherwise, we will both see you next week. Have a wonderful day. Goodbye.
Ciao.